Okay, how does that impact my ability to continue to pay income to myself?
I'm 65 and have $3.7 million. I figure with family history, I've got around 20 more years to live. How much should I realistically spend on a house? I have no other debt and don't expect any sort of windfall anytime soon. Thanks, Joanne. Well, certainly with $3.7 million, you're in a situation where you can most likely go buy that house. But I think still doing it prudently and very wisely is key. And I think we'd have to ask a few questions of Joanne. First of all, why do you want a new house?
Right.
Are you a current homeowner? We're assuming at 65, this is probably not a first-time home purchase. So you'd have some equity that would carry over. And if you don't have any debt right now, I'm assuming that you're planning to pay all of that, pay for the house outright up front. So if you're downsizing, that may be a very easy thing to do. If you're upsizing, you may be looking at some of these assets and planning on using some of that to pay for the house. And that would be the first step to really being careful as you walk through this, because where is that $3.7 million? What type of accounts is it? It's just like the previous question we had earlier, John, that you really have to watch out for taxes.
Yeah, you take a $400,000 or $500,000 house. I don't know what size house Joanna's looking at, but even if you said $1 million house, think about the taxes on that withdrawal on top of the income that you're already drawing. And then I think there has to be sort of an analysis of, okay, how does that impact my ability to continue to pay income to myself? Now, that $3.7 million that she has likely could fund a monthly payment on a house, and you may be in a lot better shape by not, impacting the taxes in such a huge way in one lump sum, because when you are retired, that also throws you into IRMAA as far as Medicare is concerned. IRMAA is the kind of the bad thing about Medicare, that it's means tested. And so if you have a high income, then they're going to bump up your premiums pretty significantly every month. And then you have to go back to the government, prove, okay, that was just a one-year thing that my income was that high, and get those premiums lowered back down again. It's a big hassle. You probably don't want to do that. You probably also don't want to pay that additional tax burden if you are taking a huge lump sum, as opposed to just building that monthly payment into your cash flow that you're already taking.
Yeah, and one other piece for Joanne here that I would sit on for just a minute too. She says that she figures with family history, she's got about 20 years to live, which would take her to 85. Estimating life expectancy is certainly complicated. Family history is a piece to that, but you should make sure to plan for a long life. I tell clients in the meeting room often, it is better to plan for a long life and not get it than to not plan for a long life and get it. So having this cutoff in your mind of I'm only going to live 20 years, you certainly want to be careful and not plan to that 85.
Scott, that's one of the biggest debates that we have in terms of talking to people about their retirement income. They go, I want to use some of this money while I'm young. And I agree with that. I think that makes a ton of sense. But the thing that you don't want to be into is a situation where you deplete your assets and all you have is Social Security to live on late in your life. Or you have to start selling assets that you have, like sell your house and downsize to an apartment or something of that nature. Those are not things that you desire to do. So you have to be careful and actually go through a bit of a balancing act to understand the impact of lump sum withdrawals on how that allows you to maintain the income. And when I say the income, I'm really talking about your dignity and your independence in retirement, that you don't spend all of that on the upfront, and you enjoy yourself. Obviously, buy the house that you want, but do it prudently, as opposed to doing it and just saying, I'm just going to pay cash for it and that's it.
I know a lot of our listeners get the Get Ready for the Future show on radio and on podcast. Did you know we have a YouTube channel? Want to invite you to subscribe to it for exclusive content you can't find anywhere else to help you discover, protect, and share true financial independence. Just search for Gen Wealth Financial Advisors on YouTube and subscribe to our channel. Just another way to get more education and more information from the team here at Gen Wealth.